Ladies and gentlemen, good day and welcome to the Century Enka Ltd Q1 FY2024 earnings conference call hosted by Sunidhi Securities and Finance Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Surya Narayan from Sunidhi Securities and Finance Limited. Thank you and over to you, sir.
Thank you, Lijan. Good afternoon, everybody, and a very warm welcome to everyone. Thank you for being on the Q1 FY24 earnings call of Century Enka Ltd. From the management side, we have with us Mr. Suresh Sudhani, Managing Director, and Mr. Krishna Gopal Acharya, CFO. Before we start with the question and answer session, we'll have opening remarks, comments from the management. I will now hand over the call to Mr. Suresh Sudhani for his opening comments. Over to you, sir.
Good afternoon, everyone, and welcome to this earnings call. I'll brief you on the operating performance of Q1 FY24. Our revenues in the first quarter declined due to an 8% decline in the overall volumes on year-on-year basis, subdued replacement demand, lower export of tires due to global slowdown in wholesale sales of commercial vehicles and tractors, two-wheeler sales remaining below pre-COVID levels, an increase in imports from China affected NTCF demand in India. In nylon filament segment, lower demand for garments and dumping by China at cheaper prices impacted volumes. The focus of the company has been to rationalize the portfolio and reducing costs in the NFI segments. On the raw material front, there was a significant volatility in caprolactam prices during the quarter. The caprolactam prices reduced from 1723 metric ton in March 2023 to 1570 metric tons in June 2023. Chips also corrected in line with caprolactam prices. Month-over-month drop in raw material prices led to losses on inventory in hand and impacted margins. Electricity rates remained at an elevated level as well. Commissioning of group captive hybrid power plant should help in the reduction of power costs from Q2 FY24 onwards. Now to update you on our CapEx projects. In Q1 FY24, there was a cash outflow of rupees 47 crores towards ongoing CapEx programs. The polyester tire cord fabric project is expected to be operational in Q4 FY24, while the expansion of NFI capacity is also expected to complete and commission in Q4 FY24. We have started trial runs for our dipping project, which is expected to be commissioned in Q2 FY24. Lastly, the 10.5 megawatt wind plus solar hybrid power project has been commissioned in July 2023 under Gujarat's group captive policy. I now hand over the session to Mr. Krishna Gopal Acharya for giving the financial performance.
Thank you, Sodhaniji. Good afternoon, everyone, and welcome to Q1 2024 earnings conference call of Century Enka Limited. Firstly, let me thank our host, Sunidhi Securities, for hosting this earnings call. Let me brief you on key financial highlight for the quarter of financial year 24, after which for the first quarter of financial year 24, the operating revenue stood at 429 crores, which decreased by 25% year-on-year. EBITDA for the quarter stood at 22 crores, which declined by about 65% year-on-year, representing EBITDA margin of 5.02%. Net profit was reported at 14 crores, which declined by 67% year-on-year at a PAT margin of 3.15%. NTCF sales for the quarter decreased by around 23% year-on-year to 219 crores, while NFI sales for the same period reduced by 21% year-on-year to rupees 192 crores. We can open the session for question and answers.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star in 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anant Mundra from My Temple Capital Advisors. Please go ahead.
Hello. Yeah, thank you. Thank you for the opportunity. So my first question was on the volume guidance for the year. We've seen that this quarter there has been a sharp drop in our sales volume. So could you give us some idea about what kind of volume, sales volume can we expect for this year?
Yeah, we did have a sharp fall compared to Q1 last year as well as Q4 FY23, and we already elaborated on the factors leading to that volume. We are hopeful that the economic conditions and the geopolitical situations, especially in the export market, should improve in the coming quarters. So even, current estimates for the year remain that we are trying to aim and we should be able to achieve volumes equivalent to the last year.
Okay. So we are not, in spite of the new capex that has come on stream, we are not expecting any increase in volume this year.
As I said, there are a lot of variables which should improve from what they were at in Q1. And that is based on that estimate and that forecast, we expect that volume should remain similar. However, if anything in international markets were to go adverse to reduce overall demand, or the imports from China were to increase from the levels witnessed in the previous years, then there could be an impact on overall volumes.
Okay, got it. And sir, the solar plant has been commissioned now. So our expected savings on an annual basis is about 10 crores, right? From that project?
No, about 15 crores per annum. And this is dependent on we are calculating the saving against the grid power rates. So if the grid power rates were to go up, then the savings, on paper would be larger than 15 crores.
Okay, and these savings will start accruing from Q2?
Yes.
Okay. And similarly, on the dipping project that you're planning to commission soon, is there going to be some cost saving on that, or will that help us increase revenue?
There will be both. One is we were sending our products to Bharuch plant for dipping, so we'll save on the freight cost, and after dipping we can directly sell the products directly to the customer factories. And second is this was established mainly because we were short on the dipping capacity overall, even before expansion. So when the markets improve, we definitely expect volume increase coming from the dipping plant as well.
All right. And sir, any estimate on how much could be the cost saving from this, the save in logistics cost?
We cannot give specific numbers, but this project was conceived as a combined savings for both logistics saving as well as volume gain.
Okay. All right. And sir, on the PTCF plant that is going to commission in Q4, so are the approvals, as in the customer approvals for the quality of PTCF that we are going to make, have they already been done, or once the plant gets commissioned, after that we'll go in for approvals?
Yeah, that process will start only in Q4. So we are not budgeting any large commercial sales to happen in Q4. But from FY25, we expect full commercial sales of the PTCF plant.
Okay. So from Q1 of FY25 itself, or it'll probably ramp up in the second half of FY25?
As of now, we expect that we should get the approvals in Q4 itself. But even if it is a spillover, it will be a month or two only, not second half.
Got it. All right. And sir, how much is the balance capex left now for this year? We've already done 47 crores this year, this quarter. So how much is the balance left?
So our overall plan for the year is around 80 to 100 crores. So around 40 to 50 crores further will be incurred in the year.
Okay. And have we thought of any capex for FY25, FY26? I mean, beyond this, once this phase of capex is over?
As on the approved capex plans, there are nothing which is planned. Only maintenance capex or the incremental capex on improving efficiencies will be there. So no large capex is pending, which is approved by the board as of now, except PTCF, which is going on.
Okay, but I'm sure there must be some deliberation. So can we expect some announcements of capex in Q2 or maybe Q3? Because we're still sitting on cash, so that's why.
We will wait for how do the markets improve, and I mean anyway it will be can be announced only post approval of the board. But as of now we do not have any concrete plans of large capex for FY25.
Okay. Got it. That's it from my end. Thank you.
Thank you.
Thank you. The next question is from the line of Chirag Singhal from First Water Fund. Please go ahead.
Yeah, I only have one question about the margins. So how do you see the current quarter's margin trending, and how do you see the rest of the year's margin shaping up?
So on an overall basis, our target, we still keep the margin targets at between 8 to 10% at the company level, EBITDA margins. And we expect that with increased better volumes and efficiency gains coming out of our hybrid and other things, we should be in that range for the balance part of the year. Or at least in the second half, I think what we are expecting is that the volumes and the demands improvements would come mainly from Q3 onwards. So the volume and as well as the margins improvement would most likely come from Q3.
All right. Got it, sir. Thank you and good luck.
Thank you.
Thank you. The next question is from the line of Falguni Datta from Jet 8 Securities. Please go ahead.
Yes, again, harping on the same point, how do you see, as we speak, how do you see the NTCF and NFY volumes? Do you expect the same, do you see the same kind of decline now as we saw in Q1, YOY?
As I said, we expect volumes to improve mainly from Q3 of this current financial year. So, I mean, too early to predict the Q2 volume as a whole.
No, sir, I'm not asking for the Q2 volumes, but as we see now, in the current situation, this July and August, if we take, or even if you can talk of this month, are you seeing any improvement or you see the same situation as of now?
Yes, as of now, as I said, we don't see any significant changes. But
okay.
We do expect it to improve from Q3.
Okay, and sir, I just missed on the capro prices you mentioned that are currently prevailing.
So we had mentioned in our opening remark that I mentioned that they had fallen to about $15.70 by end of June. They are in similar range between $15.50 to $15.70 currently.
Okay. And sir, my last question on the domestic demand, how do you see the NTCF and NFY demand, domestic demand versus same time last year? Because the volumes would be, I'm sure, lower because of the dumping from China. I'm just trying to understand, had the dumping not happened, how is our demand, the domestic demand?
So domestic demand from compared to last year has not grown significantly. And one of the reasons is that the replacement market has still not picked up. So while there has been some increase in imports from China, when we talk to the customers, I think they are all anticipating that the demand should pick up for their segments which use NTCF from Q3 only.
Okay. Thank you, sir. That's all from my side.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Gagan Kumar from VT Capital. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, can you please share us the volume numbers for March quarter as well as last year June quarter?
So, March quarter volumes was 17,602 and Q1 in corresponding year was 17,598.
17,590 and for March, please repeat again, sir.
17,602.
17,602. Got it, sir. And sir, we have seen like this caprolactam prices have declined significantly, but our margins also kept on reducing on a like continuous basis. So is it because of inventory which you mentioned? But inventory days, how much would be your like carryover days, sir, for inventory?
So right from we can carry inventory in form of raw materials, semi-finished goods, and finished goods. So normally the cycle from raw materials to the finished goods is about 2 months inventory.
2 months inventory. Then, sir, we could have seen some expansion in margins, like the prices of caprolactam used to be in the range of 2,200 in the last year of June. So, which has now been dropped like 30% kind of drop has happened, but 20 to 30%. So then what kind of margins? We haven't seen any improvement in our operating margins. It's kept on declining, sir. Please throw some light on that.
So one of the reasons for low margins is the falling prices. And if the fall is sharp and month on month, then we incur these losses on inventory that we carry, especially on the NFI side. So we do expect that once the prices stabilize or start rising, we should see improvement in the margins based on the same logic of increasing the prices versus what we carry in our books.
Right. Got it. And sir, we are opening 2 new segments like NFY and PTCF in 24 end, okay, which will throw from 25 onwards. So what kind of capacities we are adding up for these 2 segments, sir, if you can throw some light on that?
So the total capacity, installed capacity end of FY24 will be increasing from current 86,000 to 94,000 tons per annum.
86 to 94?
94, yes.
Okay, that's FY25 beginning, right?
Sorry?
That's FY25 beginning, like FY24 end.
End of FY24. So for FY25, for the full year, we will have 94,000.
And so the margins are pretty better in these 2 segments, or it's in line with our existing segments? Like for NFY and PTCF?
These are all, one is PTCF is mainly to service the growing requirements in the passenger car tires, reinforcements in that. So that's basically a diversification strategy to address the stable or slightly lower demand from NTCF in future. And the NFI is basically a value-added addition and to address the segments which normally command a better margin compared to other products.
So what kind of sales that would contribute to your total overall top line, like NFY segment?
We do not give any segmental because we are reporting only and operate in one single market. So we are not giving any breakup of the individual values. So, but this should be accretive by about 100 to 150 crores per annum.
150 crores per annum. And so we have seen like the nylon segment is not doing that great compared to the tire segment, and that's weight also in overall sales is roughly 45%. So are we planning to some change in that overall sales mix once we push up with all those these 2 new segments in the tire business?
Yeah, so the PTCF is basically targeted to reduce the nylon part of the total turnover, And in future, we do, at the right time also plan to expand the PTCF portfolio as the demand for these segments and these tires which use this reinforcements goes up.
So, sir, what kind of overall share from this tire segment in the total sales we are just targeting in next 2 to 3 years down the line?
That increments is basically coming mainly from the PTCF segments. So that will be accretive to the reinforcement side. And as we have mentioned, we are doing a right sizing of our nylon filament yarn segment. So it will be, broadly in the similar range, but more towards the reinforcement value.
Got it. So that's from my side, sir. I'll come back in a queue, sir.
Yeah, thank you.
Thank you. The next question is from the line of Mehul Parekh, a shareholder. Please go ahead.
Can you hear me?
Yeah.
Yeah. Good evening, sir. Sir, I want today electric vehicles demand they have a greater wear and tear on the tires. So the life becomes a little shorter, and I believe that they require better reinforcement. So my question is in basically 3 parts. One is that do we actually supply for the NTCF which is used in EV tires? One. Second is, does it require higher weightage? Meaning in the weight of the fabric that we are NTCF we would be supplying, would it be higher in terms of weight and strength? And third is that in PTCF, will we be able to again cater to the EV tires?
So, the tire companies actually are developing tires which are suitable to EV segments. And you are right that the weight of the EV vehicle is more than the internal combustion vehicles, whether it is a two-wheeler or it's a four-wheeler. There is no immediate plan. I've not read or I don't see anywhere in the horizon that, except that it has come in the buses, but the EV segments in the trucks or the even LCVs are not in the near future, where the NTCF is mainly used. In the passenger car tires, the polyester is used as a polyester tire cord is used as a reinforcement, and in the two-wheelers, it is nylon tire cord. So the construction of the tires, is basically driven by the tire companies. But it's too early to really say what kind of mileage or kilometers would require, and whether it is going to be early or compared to an internal combustion vehicle. But the tire companies are doing R&Ds and trying to also understand the similar tire construction in the other geographies, other countries. So hopefully, when the volumes and come for, and if it requires a earlier replacement of tires because of the higher weight of the vehicle, then possibly the replacements would increase than what they are currently.
So currently the EVs that are being sold, the tires being supplied by the local tire companies, they are using PTCF which is of the same quality, or it is like a different quality, or aramide is used, or some other kind of a construction material. Any idea on that?
As of now, in our interactions, it is similar.
Okay.
Because it's still a development area for the tire companies as well.
Okay. And sir, one more question. In Bharuch, we are putting up our PTCF capacity. If we start utilizing the entire capacity to its optimum level and we decide to expand, do we have enough space and resources to build up the capacity to a significant level there?
Yes, the planning is, since we are right-sizing our NFI capacities, particularly at Pune, so we'll have sufficient capacity for expansion of PTCF for next few years.
Okay. And sir, is there a potential for us to increase our renewable energy production from 10.5 to say 20 megawatts or something? Is there a possibility at any of these 2 locations so that we can further take advantage of lower power costs?
Yeah. So we have not. We are still in the process of evaluating the renewable power for the Pune side. So that potential exists, and we are seriously evaluating that in the near future. In Bharuch, this is determined by the government policy because it's limited to RPO and non-RPO sectors, and then it is linked to the demand, the contract demand that we have with the grid. So there is no significant possibility of increasing at Bharuch, but we do intend to look at this very seriously for the Pune site.
Okay. Thank you very much. Thank you.
Thank you.
Thank you. The next question is from the line of Hardik, an individual investor. Please go ahead.
Good evening and thank you, management. So just wanted to understand the growth prospects in the PTCF. As I understand that NTCF is a low growth industry. So if you could just give some details on that.
Yeah. So PTCF growth is linked to the growth of overall four-wheeler segments because it's used exclusively and primarily in the passenger car segments, both the SUVs and regular cars. And the penetration level of the four-wheelers in India with our population is still very low compared to even developing or developed countries in Southeast Asia or especially China with a similar population. So that gives us a good potential to, for the industry to increase the overall utilization of PTCF in the growing four-wheeler segments. So that is where it comes from. That I think we are still at an inflection point where a lot of two-wheelers and when the middle class grows would actually move to a four-wheeler segment, and then that segment should lead to larger demand for PTCF.
And what would be the weight in the tire for PTCF and PTCF both? So a weight and value, if you could give that.
Value is something we are not able to give because there are multiple components. By weight, normally reinforcement is about 10% of the tire weight.
Certainly. And it seems that PTCF as well would be import driven. So what would be the company's market share post the expansion?
Actually, we are starting, it's a small capacity since we are making an entry to the new segment. Mm-hmm. So it will be a small market share because currently most of the PTCF is imported with very little production happening domestically. So we'll start with a low margin of single digits going up to two digits gradually. And with expansions, our target would be to reach similar levels like NTCF in coming years.
Okay. And it seems that NTCF, overall, it will be driven by imports as well. So any plans of company to invest in other products in the tire sector or different kind of textile products? As it offers a good amount of cash?
We keep evaluating, and as and when anything is finalized and approved by the board, it will be informed to the stock exchange and all the investor community.
One last question. So, how is the demand for NFY seems, because the textile commentary from many industry experts has been that it will be soft for the year. So, if you could provide some data on that.
Yes, it has been soft, for a few quarters now. But it is all going to be driven by, one is exports of finished garments to the Western countries, especially US and Europe, because then that impacts the entire value chain. But we also expect that, with rising footfalls and better aspirations for lower middle and middle class segments, that in the coming festive seasons, the demand should be better, because normally our products finally go into products which are sold mainly during the festival and the marriage season, so which is coming, and the next 6 months would would hopefully give a better demand picture than what it has been for 1 or 2 quarters.
Okay. And any update on the land parcel that we have in Mahar?
No, it remains the same. There's no change in the status or any plans on that.
So even for the new capex, it won't, for that purpose as well, as of now, it won't be used, right?
No, because our 2 sites are fully functional. So first we want to utilize the potential available at these sites, and only then, when we see that there is a requirement for a third site to be made operational, we'll think of that. Or it could be for new products or new projects as well.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Falguni Datta from Jet 8 Securities. Please go ahead.
Yeah, sir, I just missed on the NTCF and NFI volumes that you mentioned for Q1 of this year, Q1 FY24.
Q1 FY24 is, we have mentioned 16,188.
Okay, that is the combined NTCF and NFI volume, right?
Yeah. We give on combined basis only as one.
And what was it in same time, Q1 of FY23?
17,598.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Gagan Kumar from VT Capital. Please go ahead.
Good afternoon, sir. I would like to know what are the net debts of the company as on June quarter?
It is around 52 crores rupees.
52 crores. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Thank you for the opportunity. Sir, most of my questions have been answered. Just one thing. Sir, why don't you consider a share buyback? So that would be very, very helpful for the investors rather than giving dividends and utilizing the funds on our books. Thank you.
Thank you. We have, since this comes as a regular suggestion, we have given this suggestion to the board, and at appropriate time, I'm sure the board will take a decision on this.
Thank you.
Thank you. The next question is from the line of Surya Narayan. Please go ahead.
Yeah. Thank you, sir, for taking me. So one question pertaining to the CPCS. So what is the total demand at the moment for India is concerned? As you said, there is no manufacturers manufacturing this product. So what is the total demand and what sort of capacity we are building up there?
So, our estimate of total demand is close to 30,000 tons per annum, and our capacity would be about close to 10% of the total demand.
So and sir,
current demand.
Okay. And you, because I believe that this is a risk mitigating exercise, because NTCF we are saying due to the radialization the demand is sagging, and at least it will take care of the passenger car vehicle demand. So in this case, what I wanted to understand is that you have time and again referred to your the submission that you are expecting Q3 onwards the demand for both yarn side and the NTC side to improve. So what has led to give such kind of optimism from the Q3 onwards? You give that for Chinese situations will improve, and or let's say economic situations improve elsewhere. What is that?
So, see, one of the drivers is also the farm demand, the rural demand, both in terms of tractors and two-wheelers. So, normally after the first harvest, Kharif, and since the monsoon has been relatively good, that is one optimism for better demand. Second, from from the NFI segment, as I said, this is also driven by the festivals and the marriage season, which is also falling primarily in Q3 and Q4, mainly in Q3 this year. So these are two major drivers. Plus, with the government's infrastructure spend on roads as well as there is a multiplier effect which goes in requirements of more vehicles and similarly replacement of tires, and even the GST collection has been good. So these normally, there can't be a direct correlation, but these normally play out after a quarter or two, and it starts reflecting in the value chain demand after that gap. So these are the basic reasons to say that possibly from Q3 we'll expect better demand.
And so for the PTCF, why you say that it is exclusively for the passenger vehicles, because significant realization has already happened in the truck and bus PBR segment. So why you are confining to only car segment? What is the rationale?
No, this is a technical thing. The radial tires in the truck and bus segments actually use steel as a reinforcement, not polyester. So because the weight of the tire and the construction is where steel is seen as a better product compared to, and polyester is not used anywhere in the world in that segment. Polyester is used primarily in the passenger car vehicles only.
Okay. And then, if you can bifurcate the total capex between the PTCF and the others, NFI and others, out of 80 crores for this year?
We do not give all these because for competitive reasons, but I think we have given sufficient overall capex values. But just to give assurance, the majority of this is on PTCF.
Okay, so my humble submission to the board is that if you can consider giving bifurcation of the product segments, performances, so that will be very much investor friendly. Although I agree that some kind of competitive spirit will be intensified, but still it will take care, and people will definitely reward the company because it has been totally undervalued. So that is one submission. And second is that to understand from the yarn side whether it is the yarn is following the cotton cycle, because the cotton has fallen significantly since last year. So is it following the yarn, cotton as a fiber? So what is the case? Because what my sense is that cotton for candy is to stabilize around 50 to 55,000 even after the new crop arrival in the new season. So what is your understanding, sir?
So actually, to give a update on your first part, actually for both the products that we talk about, we have to make first the yarn, and only the subsequent processes we convert it into a nylon tire cord and specialized nylon filament yarn. And that's the reason that we give, because a lot of things are also common in terms of the utilities and even the manpower and other things. And that's the reason that we report our results in one segment. Second, on cotton, actually we do not compete directly with cotton. While there could be some substitution depending on the pricing, but there are some specific properties which are in favor of cotton or even viscose, and there are some things which are specifically exclusively for the nylon side. So normally there's not much, the segments don't interchange, and even the weavers and the machines are designed to process normally one type of yarn only.
Okay, regarding the segmental dissemination, always we can knock off the SG&As and the other common expenses. So that is not a problem because we are tracking not a
No. But as I said, I mean, one is that. Second is it's also the competitive reasons that we report, and one is that the nature is similar. Second is that it's also competitive reasons.
Okay, sir. Incrementally, because in the market there is a sense that people do not see the NFI segment that much with good sense rather than the tire segment, which people are very much interested. So I just wanted to understand whether incrementally, whatever the capex in future, although you have guided that no major capex beyond FY25 is seen, but still you are holding a view that if let's say PTCF demand were to rise, then definitely you would be putting up more capacities because we are hardly having a share of let's say 10% or 110. So incrementally, will you consider investment into PTCF rather than yarn segment?
Yes, I think we have stated that our investments are primarily to be serving the auto or the tire segments, and only some small value-added capexes would be made in the NFI side.
Sir, any thought in the long run? Some of the investors were asking me that whether any sort of possibilities of merger with group company Grasim in the longer term. Is it on the cards?
These are all board decisions. I mean, we don't have first of all access to any thinking on that line, but these are will be informed or can be